Good day, fellow investors. Here, C-Squared asked how he's a long-time subscriber. Thank you for the information. And there is a question about my research platform that I think I can put into a video, give you 2 value investing stocks to buy from my research platform, and discuss the investment strategy and how the process goes behind what I do. It will be great for context. There is a diversified portfolio. I don't recommend it. The model portfolio with 7 positions is what I would say really reflects the platform. But for those who need more ideas, there is also the diversified portfolio that helps me also follow more things closely. You only know a stock when you own it, and that has been a great addition, the diversified portfolio, to the platform. And this topic would make a fantastic video, so let's do it. So how to start value investing, how is implementing value investing into a portfolio, how does it work? And we'll do that with discussing 2 food stocks that I think that are a good buy now. I've been doing this for 20 years now, value investing, doing great, beating also the market since the model portfolio has been launched on the research platform, almost now 7 years. So we have been doing well. There is a lot of happy customers, and you can check everything on my research platform. Clicking in the link in the description below, value investing strategy, always some ideas. I buy something every month. Great comment section for asking questions, a lot of discussions there from value-minded investors, so feel free to check it out. 21-day money-back guarantee. Now, let's immediately start with the value investments. There is the curriculum on my research platform. There is also the intrinsic value calculation premium version of an Excel sheet. This is the YouTube version. Only Archer Daniels is on the premium version. The rest is all different stocks. I have to earn my living, but let's immediately start by checking the course curriculum, and let's start by discussing a little bit Amsterdam Commodities that I updated yesterday. So on earnings, the company delivered good earnings, and you can see here how it goes. Usually year-end I write a new updated thesis on the stock. Quick summary, earnings per share 2 euros, the stock price is around 21, so that's a P ratio of what, 11, 12, that is what we are focused on. 5% yield plus likely 5% growth going forward. 10% plus long-term returns. Good to great buy, great for dividend portfolios that look for a bit more diversification. The market cap is just 600 million. The company has been growing for the last 100 more years. They do it by acquiring these other food companies. Trading Organic was a big US acquisition. Now they acquired some in the Nordics, Daily Nuts. So at a glance, a food company, trading company, spices, very niche oriented, has less competition, good earnings per share, dividend, good dividend, constantly growing over time. They announced more acquisitions. They are a global company. And this is what they are doing: spices and nuts, edible seeds, organic ingredients, tea and food solutions, global presence there. And they have been around. I have been following them now for 10 years. On and off, depending on the stock price, and they have found now a new CEO, new CFO. That was also an issue, transitory. So very interesting. There was some coconut hedging issues with the organic ingredients last year that subdued the stock price. What we are now back to normal, and this is something that I own in my portfolios. I think it's a full position in the diversified portfolio, that's of 20 positions, 5%. It's a much smaller position in my model portfolio because you can see here I have plenty to search, select from, now researching Europe, and then we'll go on with other ideas going forward. Now there is also your ideas that I check here and there and give you some comment. If we look at the stock valuation, So we have the dividend here, and we are now in line expecting a 6.7% yield for a 10% return. If the market is happy with a 5% yield and the dividend keeps on growing, then we are still looking for 40% upside just from the, let's say, market revaluation if the company keeps growing. But perhaps this would be more fair, so still below intrinsic value for a 10% estimated return. On exuberance, we can put it here, but that could happen, will possibly happen in the next decade. And there is also a margin of safety. In the worst case scenario, the dividend could be 8%, and that would just lower the downside for 25%. This is how I do. Then I compare things and put in those portfolios. And another thing that is very important is that building a portfolio lasts decades. You reinvest the dividends. It's like watching paint dry when it comes to value investing. I always tell people, excitement, you can find it in the bedroom, you can find it outside, not in your stock market portfolio. And that is the long-term process. We have a comparative list of 30, even more on my other selections. So I buy each month something, balance things in the portfolios, look how it's going, compare on the table. I constantly also research new things, because not only that I find new things, it always gives me better context to also other opportunities. We wait for the prices by comparing them on our premium comparative stock list, and we expect the businesses to reward me, not the market. Of course, that is the key difference. If you look at what I do, the P ratio of the portfolio is around 12. 12, that's an 8% earnings yield, add 5% of growth, and no matter what happens to the market, the business will likely deliver my returns. And another stock that I think it's a very interesting value investment addition to any portfolio is Daniels Midland. I have recently made a big analysis there. And you have this deep dive here, 20 minutes discussion for the video. And in conclusion, I think that it will deliver good dividends, good cash flows with the ups and downs of the food cycle. And here I say it goes mid-position in the diversified portfolio. If their food cycle weakens, then we will buy more. It is in the model portfolio with an accumulation strategy depending on price, but if the food cycle downturn persists, the stock can go lower, which is a positive for value investors. So for now, 4% dividend, something like that. You can see the long-term compounding trend. These are the food cycles, bubble, crash, bubble, and that will go on and on. Again, the P ratio is there, the dividend yield is there. It is a very defensive company, and therefore you can start considering to add in and then build a position in a portfolio. Of course, check my research platform for all the stocks. And how to start here, I think you just start every week, you read one report, and then over the next 12 months, you will be a specialist on more than 20 companies, value investing companies, if not more. Give yourself time, and then when you rightly know what's going on with what business, then you can know, okay, does this lead to my financial goals? And then okay, I'll buy more. If it goes lower, okay, great, I'm happy, I can buy more, reinvest, and build that portfolio that delivers returns from the ownership of business, not from stock volatility. So you forget about the stock market, it doesn't matter for investors. We focus on owning businesses. This is what I do. I hope it gives context also to the whole YouTube environment. Thanks for watching, and I'll see you in the next video.